Hello guys and welcome to another video. My name is Mark, I'm an entrepreneur and property investor. In today's video we're talking about, is Labour going to absolutely destroy the UK? Now I've got my own personal opinions. I run businesses and I employ people, so the NI alone is causing me to have a bit of an issue with the budget that they've brought out, and I'm going to explain a little bit about how I think it's going to affect the wider market and also relate it back to property, because honestly, as a property investor and entrepreneur, I'm interested in both sides of the coin. So guys, if you like this sort of video, please give this video a big like. It really does help me out with the algorithm. Subscribe if you haven't already, and remember, if you look at the link in the description, you can book a free one-to-one video call with me. If you want to speak to me in person about any subject whatsoever, you can book that in that link, and that's available until I get to 10,000 subscribers. And at the moment I'm recording this, I'm on about 6,300, so you've got a little bit of time, but not too much, so get booking those right now. So let's talk about what's happened with Labour coming into government. Obviously, before they came into government, they were very clear that they are not looking to raise taxes. And then suddenly, what everybody, certainly that I was speaking to, kind of knew, we're going to find a black hole, we're going to blame it on the previous government, and we're going to raise taxes. Now, not to mention the fact that they have actually given massive pay rises to lots of public sector workers. Now, we can debate until the cows come home whether we think that junior doctors were underpaid before these big deals were done, train drivers were underpaid before the deal was done. I mean, I've got my own personal opinion on that, but the fact of the matter is they gave big pay rises, which caused them to need to raise more taxes. Now, how have they done this? Well, they've done it in a very simple way. They've not broken their manifesto promises, because what they haven't done is raise tax on working people. But what they have done is raise tax on working people through employers. And the big change really is this NI change. Now, what does that actually mean? So national insurance is paid not only by employees, i.e. the person receiving their salary, but also by employers. And as somebody who employs quite a few people in the UK, I can tell you that the changes that they made are going to make a substantial difference and a material difference to my wage bill. And because of those changes, what we're doing as a business actually is that we're scaling back some of our hiring plans. Now, normally in a business cycle, you have turnover of staff over a period of time. We're just going to put a hiring freeze on non-essential departments so that when those people leave, as inevitably we do get churn of staff, we're going to simply not replace them. And I'm speaking to a lot of business owners. Some are actively getting rid of staff. Others are just saying, well, actually, we're just not going to replace certain staff when they leave. So anecdotally, what I'm hearing from small business owners is many of them are very concerned with this change, first of all, and most of them are mitigating it by reducing jobs. So what could that mean for the wider economy? Well, it could mean higher unemployment. So in fact, I've got an article here in front of me that shows that the unemployment rate in the UK has just risen from 4% to 4.3%. And this is ONS figures, as businesses scale back hiring plans. A lot of these businesses, including myself, when Labour got in, had already kind of made the decision that the rhetoric and everything that's likely to happen, we're going to hold off and just see what comes in the budget. Now, obviously the budget came, what we all thought might happen has happened. There's going to be a tax on employers, and that is inevitably going to hit jobs. So what was planned, and this is one of my issues with these sort of policies, these punitive policies that tax employers for employing people. We do not have all these excess margins. Most businesses do not. If they did, you should tax them through corporation tax, not on jobs, in my opinion. And this is the problem with these sort of socialist policies and these workarounds that they come up with. It really does work me up, because the reality is we're not going to raise tax on working people, but what we're going to do is we're going to raise tax on the people that employ working people. Where do they think that money's going to come from? Obviously, it's a tax on jobs. And obviously, it's those people who voted for the party whose jobs are going to be at risk. And that was never explained. And that's why I like doing these sort of videos, because it just shines a light on just how backwards this kind of thinking is. I don't believe in taxes on jobs. In fact, I'm an ultra-capitalist. I believe in capitalism will sort pretty much everything out. If you name a contentious issue, I mean, let's take minimum wage. Should there be a minimum wage? Well, probably not in my opinion. I think that people should get paid for the gift that they bring. The reality is that companies will compete over great staff. Of course they will. Companies will compete over mediocre staff if they need to fill orders. Why does the government need to get involved in saying what those staff will get paid? And what about regional variances in cost of living? I mean, if you live in London or if you live in the south, your cost of living is significantly different into the north. So if you actually just took away minimum wage, and let's say, for example, companies were able to employ people up north for less money, well, more businesses would move up there. And then guess what happened? There'd be more competition for staff. And then guess what would happen? Wages would rise. The government doesn't need to be involved in any of these things, in my opinion. All that they need to do is stand back and let capitalism take care of all of it, because it always does. Anyway, that's a bit of a rant over. I'm sorry I had to get that out there. You can probably tell I am not the biggest fan of Labour, but I'm not the biggest fan of most political parties. I am a capitalist. And because of that, I think that whenever government gets involved in things, they tend to screw around with the way that things would just work out anyway. You know, the minimum wage thing is a prime example of how capitalism would actually just take care of it. And increased competition always leads to a hiring of standards, whether that's wages or whether that's products or services. The more competition there is, the higher standards become. So let's try and relate this all back to property investing anyway, because like I said at the beginning of this video, I'm an entrepreneur and property investor. And whilst I believe that these attacks on businesses will have an impact, I do also believe that capitalism always finds a way. Whether that's raising prices in order to recover some of this money, or whether that's sacking staff and causing more unemployment, capitalism will find a way. But if we have rising unemployment, what does that mean for property investing? Well, there's two sides to this coin. Number one, people may have less disposable income and there may be less money flowing around. And that would be a net negative. But we still have very high interest rates in the UK. And this is where we would have a big positive, isn't it? Because the Bank of England has a remit not only to control inflation, which obviously would be massively under control if we have high rising unemployment and less public spending. They also have a responsibility to protect the UK economy and the jobs market. And I think that once these policies start to come in April, and this is why the Goldman Sachs article predicting 2.75% interest rates by the end of 2025, I think they said, I think that's light. I think it'll be less. I'm going to say that right now, and I'm going to do another video in December next year when interest rates will be around about 2%. I think they're going to be lower than everybody thinks, because I think the Bank of England's going to have to move. And what we've just seen is the UK has already hit all-time record high house prices. That's happened with the Bank of England easing by 0.5%. Now let's imagine a scenario where they ease by a further 3. I think it's going to be huge. I think the house price growth is going to be massive. And again, I'm thinking somewhere like 7 to 10% next year. Big, big growth. And there's two reasons for that. Number one, I think interest rates are going to come down. Number two, I think they're already massively undervalued in terms of property prices. Over the last 2 years, 3 years, we've had inflation circa for the total amount of time of about 20%. Meanwhile, house prices have only just got back to their peaks now. So we've got 20% baked in my mind. I think we're going to see 7 to 10% growth, and I think we're going to see interest rates come down massively. So I know this video is going to be ultra divisive, and because of that, I'd love to see your comments down below. Obviously, I'm an ultra capitalist. I understand there's another point of view. Let's debate it out if you've got an alternative point of view, and equally, if you agree with me, put it down there, let's have a chat. I look forward to speaking to all of you. Hopefully you book a free call, like and subscribe as always, and I'll see you on the next video. Cheers guys.